Hey VV Nation, Glenn Tompkins here, senior instructor here on our YouTube channel, and I love bringing these videos to your attention. This video is all about how to optimize your portfolio for maximum returns. And I'm going to put this in a way that everybody as an investor really truly needs to look at their portfolios going forward. Some of this you guys already know. Some may be introduced to a new idea or a new way of thinking to actually manage your portfolio in a way that it can produce the maximum results for you. So from this perspective, I need everyone out there to understand that investing in a portfolio or managing a portfolio should be looked at like managing a business. Now, many of you are already doing that, but many of you may be brand new to investing or just moving around trying to get a better understanding on how to invest and run your portfolio. Understand that you need to be running it like a business. Now, with a business, you have employees. In this case, your employees will be your stocks. And if you're running a business, you have to make a good return for the people who invest in your business. Well, you're going to be the main investor in this business, and you need your stocks to perform for you, or you need to think about replacing them with another employee, aka new stock. So let's start off with, as a business, you have to look at the business climate. What's going on in your business to help you to either make money or reassess what's going on to continue to make money? And for us, it's always going to be market timing. So as I get into the software, here's the market. From the perspective of what's going on right now, you've got to understand that the market is in a little bit of a downtrend. I'm looking at a 3-month graph here. And as a business, hey, the market situation turned around. Your business situation could have turned around. This was a good time to get into stocks, to move your portfolio, to try to capture the most maximum gains as you could. As the situation or the market turns around, that's going to affect the stocks or the employees in your business. So here, when the market starts to turn over, what do? Well, do you hold on to those long-term positions that you normally have? Or do you pivot and start to make sure that you capture profits? Remember, this is for maximum returns. Do you capture your profits here and wait for a better opportunity? Now, many of you will say, well, I'm in some of these stocks in my portfolio for the long term, and no matter what happens, I'm going to hold on to that position. Now, that's your decision. If you're trying to maximize the potential profits in your portfolio, at some point in time, you've got to know when to hold them, know when to fold them, know when to walk away, and know when to run. You never count your money while you're sitting at the table. There'll be time enough for counting when the dealing's done. So from that perspective, when the market starts to turn around, that's a great time to make sure that you capture your profits. How many times have you been in a stock that you've made gains on only to give it all back to the market? I know that this video is not live, but I'm curious to know in the comments, let me know how many of you have fallen into that trap. So as I'm looking at this from a business perspective, I've got to make a business decision and not a heartfelt or personal decision. That's not going to help me. So keeping it on the level of business, that stock that you like long-term may be a stock that does go up over time. But time that position. Make sure you maximize the potential on that stock and don't give it all back. So let's look at what's going on right now. CPI number came out. It affected the market adversely. They had a little short run up here. Now, even that, how many times have you been in a stock, it ran up, you're like, woo, turned around, and real quick it falls, and you sit back and you wonder yourself, what just happened? And then you make the decision of, I know it's a good stock. This is just a pullback. I'm not going to get rid of it yet. And then you start to take on the big losses. That's not maximizing profits. That's giving in to what you feel here, thinking that you can outguess the market, and the market is going to humble you each and every time. So with the current conditions right now, big down day, the market turned over. Now, a lot of you will say, well, wait a minute, I'll get out of the stock and then the stock will go back up. Why did I do that? How did you know that the stock was going to go back up? You don't know. So if you're trying to maximize profits, you can always get back into a stock. You ever heard the statement, there's a bad time to be in a good stock? Keep that in mind, because you never know what's going to happen, and you want to err on the side of maximizing profits than trying to be greedy and try to take more than what the market is trying to give to you. All right, so that's the first step. The first step is understanding the conditions of what's going on in your business and adapting to that. Now, the next thing is, what about your employees, or in this case, your stocks? Let's go to our viewers tab. I've got a watch list of some of the most widely held stocks out there. And I get questions a lot. Hey, what should I do with this stock? Hey, what should I do with this stock? Hey, what should I do with this stock? And this premise of managing this like a business will take that question away from you all the time, and you can make the right decision depending on how you're running your company. So look at these stocks. We have Tesla. We have ExxonMobil. We know what's going on with energy. Advanced Micro. That's a very popular stock that people know about. Google, Nvidia, Apple. Now, as much as I love Apple, I'm not in love with Apple, and I try to manage Apple as if it were a business. There's a bad time to be in a good stock, and I pay attention to that. Disney, everybody knows about Disney. Microsoft, Johnson & Johnson, Amazon. Some of the most widely held stocks out there. Now you need to know how to run this as a business. Now, with whatever tool you have to have a tool to be able to effectively analyze the positions that you're in. As you know, we use VectorVest. A lot of you don't have VectorVest, but whatever tool you need or whatever tool you have, it has to be able to analyze your stocks in a way that helps you to make the right decisions, not just data. You need information. So as I look at this list, every stock in this list, I can fundamentally challenge or see what's got really good fundamentals. We have our indicators, relative value and relative safety. Any of these indicators above the value of 1 cast on a scale between 0 and 2 is favorable. I want to make sure that if I'm trying to hold on to a stock, that it's got the fundamentals behind it to be able to help me to hold it longer term. Now, this is important. If I've got a stock that I like because somebody talked to me about it and it's got great upside potential, if it doesn't have the fundamental stocks, you have to make a business decision. Long term, great. And a lot of people will say, well, if I hold it now, I don't have to buy it at a higher price later. Would you rather hold it at a lower price now and watch it go lower than to buy it at a higher price and put yourself in a higher probability for the stock to continue to go higher? That decision is yours as well. I'm just bringing you to the water, folks. You have to be able to make the decision to drink it or not. As I look at all of these stocks, for the most part, these stocks are fundamentally sound. Now, as I look at that, I look at the earnings. Earnings is the engine that drives a stock's price higher. All of these stocks have positive earnings. For the most part, they grow their earnings in double-digit wins. So for the most part, for these stocks that we're looking at, these stocks are fundamentally sound. Are they going up in price? Aha! RT is that indicator. Out of the 10 stocks that I have here, only 3 of the stocks are in uptrends. But that makes sense. The market is pulling back right now. That means that most stocks in the market are not in uptrends. Even if they are fundamentally sound, I want to know that they are going up in price. That becomes a business decision. If you've got a stock that's got an RT below 1 and you've already made profits in it, why not take the profits knowing that the upside trend of the stock has dwindled or fallen? Don't put yourself in a situation where you're investing in a stock that's going down, even if you do like it long term. Next thing I want to look at, every stock in our database has a recommendation of a buy, hold, or a sell. If I've got a good long-term stock that I've liked and I've made money in it, but it's a sell recommendation, again, that becomes a business decision. It's not that I don't like these stocks. I do like these stocks. They're both, one of them is undervalued, the other one is not. But they're sell recommendations. At some point, you hold the sell recommended stock, but you hold it at your own peril. A lot of people will say, when they see a stock in a database that's got to sell, what do? I still own it. I still think that the stock is going to go up. All right, fine. Then you make that decision, and that employee in that company who may not be doing well, what do? Is that employee helping you to grow your business or helping to pull your business down? It becomes a business decision, not a emotional decision. And you know something, folks? Women are better investors than men. You know why? Because men are born with egos. Men don't like to admit when they've made a mistake. That's real. All right. Some of you may be hating me for that. I'm okay with that, but it's real. But don't let your ego step into play to take away your ability to maximize your profits. That's what it's all about. So if I've got stocks and whatever tool that I use and I can analyze these stocks and I see that a stock's got a sell recommendation, I need to consider taking that out of the fold right now and wait for a better opportunity for the stock that I think has good upside potential. I got to wait. All right. So putting all of that in play, let's add another feature to this by looking at the graphs of these stocks. Why? Because a picture is worth 1,000 words. If I graph all of these stocks, let's go put them on a 6-month graph. Let's give them a little bit more time. ExxonMobil. Now, if I held ExxonMobil down to this point, and I'm saying it's going to go up, it's going to go up. Guess what, folks? It is going up. Is it going up higher than your break-even point when you possibly got into it because you possibly bought it at the high? Whew, you got to hope and pray and wish, which are all 4-letter words. That's not what you want to hopefully do in your company. You want to be in stocks that are moving up and wait for this stock to go up before you go buying it. Well, you're making me buy it at such a higher price. Okay, yeah, I am. But guess what? Is it even at the point of break even where you were before? No, it's not. Let's wait for it to get to that point again before you go buy it. Guess what? If you would have gotten out back here, you would have taken your profit, the stock's price would have fallen, and now you're waiting for a better opportunity to get in. You can still buy lower now. Got a trend line showing me the stock's price is going up. Look for things in the graph to give you a better opportunity to know when to get back into the stock instead of riding the stock down. Many of us have succumbed to the point of riding these stock prices down and wondering, should I get out? Should I get out? Should I get out? Darn. Hey, it's coming back, but you're still not at a point of break even yet. Let's go to the next stock. Next one is Tesla. I've got this a lot like recently. Should I sell my Tesla? Well, right now, if you own Tesla, I'm going to give you a hard point where you should think about getting out of it if you haven't yet. I'm going to give you a hard stop of $264.98. Why? Because that is a beautiful level of current support. Where's it at right now? Bouncing above it. What is it going towards? A level of resistance of 315.59. When I can see a stock is consolidating, I can at least hold on rather than watching a stock go down that doesn't consolidate. Consolidation is one thing. And you know something, from a business perspective, we can go through bad times. But how bad is bad? You have to determine when that is. All right, let's go to the next stock, Disney. Well, it had a level of support as well, sitting at 108. Watch the stock's price now. It's sitting in that little bit of a channel. Let's go see. The 3 and the 8 are negative, but it's not below that level of support. Let's go to the next stock. Apple. Much as I love Apple, that was a beautiful time to get out and maximize your profits and now wait for a better buying opportunity. And even if you say, well, I don't want to buy it high back here again, watch the technicals. Can I ride the stock's price up lower than the price that I got out here and move back up? Absolutely. Let's go to the next stock. Amazon, also finding a level of support, but you know something? The 3-8 cross, it broke to a level of support. That would have been a good opportunity to maximize your profits from here and not ride it down. What am I looking for? Let's see if it can break back above that level of current resistance. Wow, Johnson & Johnson. There's not a lot that I got to say I don't want the stock right now. Long term, could it make money? Is this sort of like a recession-proof stock? Possibly. but not right now. I don't think I want it right now. For those of you who are still sitting all the way through to this video, hopefully you're understanding how you need to look at your stocks like a business and manage your stocks, making business decisions, not emotional decisions. Let's go down to the next stock, Google. How about it got to a level of support, trying to hold it currently below, but you know something? Did you give back all of that profit? Possibly. Did you take on big losses? Not just quite yet. Let's go to the next stock. Microsoft sitting right at a level of support. Again, this is the time to get out and wait for a better buying opportunity. But if you're still holding it through here, you're still hoping, wishing, and praying that the stock is going to go up. You don't want to be in that kind of situation. Same thing with AMD moving down. Same thing with NVIDIA. Folks, if you learn to manage your stocks like a business, you're going to be able to potentially maximize your portfolio and not make the emotional decisions based on what you think. And you know something, a lot of you will be out there telling me, no, that's not the case. Would you rather me sell the stock here and then get back in? Yeah. I want you to maximize your positions. I want you to grow your company. And as a business owner, do you wait until an employee just takes away before you get out? Or do you cut that employee quick and get another employee? Think about it from that perspective, all right? Folks, hopefully this opened up some doors, opened up some eyes, and put some perspective on how to maximize your portfolio's potential. Folks, this video is over. And until the next time, see ya.